Hey, welcome everyone. Tom here from Park Avenue Trading. I want to bid you guys a good hello. Please, if you like what you see, like, subscribe, give the video a thumbs up. It helps with those Google algorithms. Today I'm going to be covering something that's probably like a beaten horse. You know, it's like a dead beaten horse. And we're going to be talking about Bollinger Bands. I had a client slash student of mine question me about Bollinger Bands and their efficacy as as far as trading is concerned. And I really don't have any particular opinion about them. I know that great breakout systems were used that were developed basically based off of Bollinger Bands. The one thing that's really cool about Bollinger Bands is that you could still follow John Bollinger. I mean, he's alive and well, and he's got a site that you can go and visit. And I don't know if you can ask the man questions, but you could definitely really read in depth about his work. So without further ado, let's just keep this kind of short because I really only have one thing to add to Bollinger Bands that I actually think is a pretty important concept. But just the basics of it, the parameters for Bollinger Bands, and they can be used on any time frame you want: 1 hour, 5 minute, 10 minute, weekly, daily, anything that you want, as long as there's enough price activity in there to construct the band itself. And you'll find that on Forex markets because there's lots of volatility, especially crypto markets. So the idea is that we're going to be using a simple moving average to basically figure out what the standard deviation is. And the reason why they use a simple moving average is because that's exactly what they use to calculate the standard deviation. They want to be logically consistent. So simple moving average is used. That's this middle line right there. It's a simple moving average. And generally, the average is lengthened, like the number of standard deviations you need usually is 2 from 20 periods, okay? Or 2.1 at 50 periods. And then if you're going to lower the average, it's shortened by the number of, say, standard deviation should be reduced from 2 at 20 to 1.9 at 10. So it's very small differences, but this is what John Bollinger suggested. Now, the thing that you should really know about it is that that the relative definition is used to compare price action, and if you're going to use a different indicator, okay, it should be something completely different. Like you should be using Bollinger Bands with volatility. You should be using like a moving average crossover system, because basically the Bollinger Band is taking care of that. If you're using more than one indicator, again, they can't be directly related to one another. So a momentum indicator might complement a volume indicator, but 2 momentum indicators aren't better than 1. So it's either, just do not overlap your indicators if you're going to use them. They're great, Bollinger Bands, according to John Bollinger, they're good to define clearly and pure price patterns such as M tops and W bottoms, momentum shifts, etc. Okay, so this is what the idea of Bollinger Bands is, Now, here was the crux of it. Tags are just tags. So in other words, when the marketplace moves down to a lower band, it doesn't mean that it's a place to be bought, according to John Bollinger. It's basically just a tag is just a tag. And in itself is not, a sell signal or a buy signal. So when you come up to the upper range, this is not necessarily a sell signal, okay? Or when you come down to the lower range, this is not necessarily a buy signal. So what are these things good for then? Well, basically, major breakout systems were used when a marketplace basically closed above an upper band, basically saying that's a continuation pattern. Closes below a lower band, that's a continuation pattern. As you can see, this one on a 1 hour chart basically closed below it here. There's a little bit of price action, and then the marketplace bounced back up. So again, you can read about Bollinger Bands. They've been talked about thousands of times, and I basically just gave you a little bit of a background on them. So what can I offer with my years of experience that might be able to be a little bit better way to indicate what the marketplace wants to do? Well, the one thing that I have noticed is that there's a certain price in the marketplace that I consider to be like a critical price. And if we think about it logically, when I sat down to think about this logically, how I came up with this, I said, what happens on a weekend with a trader? I mean, like, what are you doing? Like, this is a Saturday, morning for me at 10:30 in the morning. What am I doing? I'm basically going over last week's price action. Like, what happened? I'm going over my trades. I'm looking to see, like, where I messed up. Like, what worked? What didn't work? Why did it fail? Why didn't I escape more quickly? Why did I let, like a 10 pip loss turn into a 35 pip loss? And then, so what happened there? So I like to review what I've done during the past week to try to figure out like what my mental weaknesses are. But there's also something else that, we're looking at. We're looking at, okay, so what's the marketplace going to do next week? And what is the most important, point to look at? What I found is that the open on a Monday is a really important price. Now, I think that every Monday, now why do I say that? Because the open basically is where every trader in the marketplace in the world has decided to execute their trading plan. They're looking at Monday after last week, and they're going to try to figure out what the market wants to do. And, they may have positions on. They may be short, they may be long, they may be in a cross trade where they want to leg out of a cross, they want to leg into a cross. But, okay, so they come in on Monday, and what happens on Monday is really important, because what I'm saying is that the open on Monday, and it's the only, now you don't have to use it with Bollinger Bands. You could use it, and please go back and test it. Like, mark the open on your chart on Monday and follow it through Friday, and look how that marketplace kind of gravitates to and from the open. Now, this is Monday's open. This gold line across represents the open all the way to the next following week. This was Friday. Okay, so what I'm saying is this. All right, the marketplace basically opened here. All right, now you're using Bollinger Bands, right? So here is your smooth, here was your simple moving average, okay? And here's your upper band, your lower band, all right? So maybe you don't do anything on Monday, you're observing the marketplace on Monday. Or if you are doing something like you say, oh, wow, we're breaking down through the open, and I can go short. All right, so marketplace goes down. Well, where's my stop going to be? Well, it's got to be up over here. Okay, just making up. You have to come up with your own system. But if you notice that the open, if you drive the open through, basically you're getting a great idea where support and resistance is against that open. So you have one particular price that you're using to basically determine who is screwed in the marketplace. Did somebody who sold down here? And this basically was a low. It was by the lower Bollinger Band itself. Again, that's not necessarily a buy signal, but if you combine it with simple trading techniques, you could, and of course, this is all hindsight, so it's real easy to see right now. I mean, oh yeah, you buy there and it goes up. I understand that. I mean, we're just trying to give examples here. I mean, but for instance, you have a low here, the marketplace, here's the top of that low. You get basically an inside bar, which is an important type of thing. You get it kind of like a new low, and then once it breaks the top of the inside bar, closes above it on an hourly, it starts moving back up. What does it hit? It hits right into the open of Monday. Monday, that open still acts as kind of a resistance, pushes a bit back down. But where's the marketplace telling you that it has the potential to go higher? Well, it hasn't broken this low. So, anywhere in here, now, if you're using some of my stuff, Tower Price basically tells you where the buy envelope is and where the sell envelope is. But once you notice where the marketplace basically breaks up and takes out this previous high, again, this is the Monday open, takes out this previous high, okay, it still hasn't closed above it. So once the marketplace basically closes above it, you got a shot. Now also, what do you have? You have a breakout of the upper Bollinger Band, which is basically saying it's continuation. It should go up, and market does. Now, I just asked you guys to go back in time, mark your Mondays open, go across through to a Friday close, and then wherever Monday starts again, and do it over. Like you can notice, oh, I haven't done it on this one. Oh yeah, I did. Here's the Monday open right here. Okay, if I truncate this, we're outside of the Bollinger Band. Does it again? That's not what John says. It's not a sales signal in itself, but however, once the marketplace basically breaks the open price, you can see that how all throughout, I haven't, let's go Tuesday 00. Right there, Tuesday, Wednesday, and so on and so forth until the next day. But you notice how this open basically acted as resistance all throughout the week. Now, I don't know if it did it all the way until Friday. Yes, it did. Look at this, because here's the new Monday coming up this week. But this open basically acted as your resistance. So that's the only thing that I can add. And again, you could use this on any trading system you want. Just mark your Monday open, because it's an important price. It's basically where all the psychology is. Like what happened? It opens on Monday. People take positions. And all of a sudden they're in the soup, or they're making money. Maybe they're adding to positions, driving the price away from the open, higher away from the open, or basically markets reversing. They're squaring their longs, getting out, maybe going short. But I propose to you that the open on a Monday is a really important price. Look forward to seeing you next time. Again, if you like what you see, please like, subscribe. Don't forget to ring the bell, and I'll see you on the next video. Cheers.